South African health insurer Discovery will pay $29 million for a 20% stake in a joint venture with the health insurance unit of China's Ping An. The signing ceremony between the two companies took place today against the backdrop of South African President Jacob Zuma's state visit to China. The president was accompanied by more than 320 business delegates. Earlier, Alishia Seckam spoke to Adrian Gore about the deal, as well as the sentiment on the ground as South Africa tries to strengthen ties with China.
I mean, my sense is the sentiment is very positive. There's a very large delegation, about 320 or so people out of South Africa. And at the same time, the speech that the president gave, I think, was remarkably positive about sort of pro-business, encouraging business leaders to grasp the opportunity. And generally, the main speech today, I thought was very, very positive. Also on the ground in China, there is a certain optimism about what's possible, in China. So there is, put all together, there's kind of an exciting feeling about what's possible.
Well, Discovery is certainly one of the South African companies that's forging a healthy relationship with China. It's set to pay $121.5 million for nearly a quarter stake in Ping An Health Insurance Company. Run us through, first of all, the rationale behind Discovery chasing the Chinese market.
The Chinese health market the Chinese health insurance market is potentially massive. There are 81 million families already above an income level where private health insurance makes sense. And some of the numbers are staggering. Where half the total spend on healthcare is out of pocket. People are spending out of their pockets with virtually no health insurance. So it's a market that's really, really sort of waking up. And the rationale, look, Ping An is a massive player here in China. They are desirous of building a specialist, successful health insurer, and many years ago approached us about the potential for partnership. So This is really the culmination of a couple of years of work with them.
Well, you've said before that the amount of capital you're committing to this deal is not material in terms of the scale you're accessing. Just how scalable an entry point are we looking at here, and what kind of footprint are you buying into?
Well, firstly, the amount of capital we will be committing, we're spending 190 million, about 200 million rand for our stake in the business. I think it's relatively acceptable. It's way below materiality, in terms of what we said at the earlier announcement. And it buys us, I think, a very, very large potential here. Ping An has 400,000 agents in China. The market itself, as I said earlier, is opening up. So the potential is I think, quite dramatic. And the purchase price is at a relatively low premium, which is unusual for China, but reflects, I think, the value that Ping An on our ability and our intellectual property.
Well, while the Chinese government recognizes the limitations of a social health insurance scheme and is certainly encouraging private healthcare insurers to develop a tiered health insurance system, to what extent are regulatory issues an issue? Have they been somewhat of a stumbling block or challenge for you?
No, there's still a few regulatory hurdles to get through, but the reality is that the Chinese healthcare system itself is going through a number of reforms, and as you say, one of them is a desire to build a viable, strong health insurance market, which bodes very well. At the same time, Ping An Health has one of 4 licenses, health insurance licenses in the country. So, I think from that side it's also positive, but it's a complex environment in that respect, but I don't believe there are any dramatic hurdles at this stage.
Complex in that respect, what kind of competitive playing field are we looking at within the region? Because surely you're not the only international operation that's gotten wind of the potential that this market boasts, and where we also have domestic players with quite a strong presence themselves.
I think the real challenge initially is to build a health insurance market. It's a market in its embryo. There's a big market in selling kind of like very basic, almost stated benefit policies that have been riders, attachments to life assurance. There isn't proper health insurance as we know it in a big way. So to an extent, I don't believe that the early factors are competitiveness. Ping An already has, I think, the largest market share in the kind of traditional life health insurance rider space, as they call it. So I think to an extent we all collaborated to build the market. But once again, I think if the market gets the kind of potential that people believe, with 400,000 agents and a very big footprint and credibility, I think we're in a very competitive space. But there are a lot of companies that are looking, but I think that our partner is probably the best.
Of course, this marks Discovery's foray into China. What have you learned when it comes to doing business in the region so far? I mean, are we looking at a culture that's hard to mesh naturally with, or has it come pretty easy?
No, I think this is I think the cultural differences are quite significant. We've got a team already on the ground acclimatizing. We've chosen a team that is clear about the need to mesh with this culture. I think there's a real challenge in getting commonality across, but again, I say the quality of the partner and the attention to detail of both sides of trying to cross that divide, I think is important. But please understand, I mean, our role is one of capabilities on the ground into Ping An Health. The execution has to be local, through Ping An.
Of course, this is a foray that also comes after a failed attempt at doing business in the States via Destiny Health. I mean, are there lessons learned there, getting your fingers burnt in the West that you can carry over to the East?
I mean, there's significant lessons. I mean, the lesson we learned in the US that we're using in the UK is you've got to have strong partners. And I think that's important. So these are markets that I don't think you can go into on your own in any way, besides the regulatory hurdles. And again, I keep stressing that I think you have to have, especially in a place like China, where the cultural differences are dramatic. You're not going to execute on your own. You've got to be kind of the intel inside, in a way. So I think it's an important lesson for us.